The profit and loss statement shows totals for a period of time, and that could be a month, a quarter, a year, it could be a week, it could be multiple years. It shows the sum of results over whatever that time period is. So if you're looking at the profit and loss for a month, it's going to show you the sum of activity across those 30 days or 31 days, whatever it is. And it's one of, again, the main reports a business owner looks at to see how the business is doing, because what it's telling you is whether or not your business is generating a profit, which is the income is more than the expenses, or a loss, where the income is less than the expenses. It is a profit and loss statement, which, if you stop and think about it, doesn't make a ton of sense because you generally have one or the other. You don't have both at the same time. But that's what it is reporting, is whether or not the income was more than or less than the expenses for whatever time period you're looking at. One thing it doesn't tell you about is your cash flow or your cash position. You can have a profitable business on your profit and loss statement that still had more money go out than came in, which on the face of it doesn't make a ton of sense. This is one of those ways it can get a little confusing. Not everything that leaves the business is an expense. So when you look at your profit and loss and you say that number at the bottom isn't what's left in the bank account, that doesn't mean the profit and loss statement is wrong. It just means everything that is an expense isn't everything that went out of the bank. By the same token, not everything that comes into the bank account is income. So your bank balance actually could be a lot higher than whatever the profit number is if you have a profit on your profit and loss, because of things that came into your bank that don't go on as income or as expenses. So the other part of that is it doesn't show you how much that you have in the bank. Sometimes we've had clients say, okay, well, this profit and loss statement can't be right because the number at the bottom is not how much I have in the bank. Well, okay, it's not meant to be how much you have in the bank. The profit and loss is not a statement of what is and isn't in the bank, or what came into the bank and what went out of the bank. It's a statement of most of what went in and most of what came out, usually, but it's not everything that came in or everything that went out. It is a statement of the business revenue minus the business expense. So that's an important distinction. And if you're looking at the profit and loss and expecting it to show you what's left in the bank, or how much total cash went out that month, or how much cash you have left, it's not going to do those things. It's still very useful and still very important, but don't set the wrong expectation for what it is going to tell you, because you don't want to be disappointed or confused when those aren't the answers that come out from that profit and loss. And that is a common misunderstanding that new business owners or business owners who've just never had any financial education don't understand.